Is the person with the iPhone, are you new? I can't see your name.
Yeah, it's me. It's Ariel.
Oh, hey, Ariel. Okay. So I'm gonna have to go through the basics. I'm gonna teach high leverage trading, how you borrow money from your own wallet to do a 6% movement. So give me 1 second. Let me see. All right. Well, some people should have been on tonight. All right, so here we're gonna go. All right, so what we're gonna need to do is I'm gonna post this into the chat. I'm gonna get compound daily interest. There's people rolling in now. All right, now check the Zoom chat. I have compounddaily.org. If you guys just click that link so we can be on the same page. I'm gonna take out this camera thing because it's blocking my view. So give me a second. Sorry. All right. So once you guys are on there, we're gonna go through the basic steps. Jen, if you see the chat, the link in the chat, we're just on that web page and we're gonna go through the compound. Okay. You also need a pen and piece of paper, you guys. So first thing first is if you guys did a $500 cash deposit and then got the bonus, it'd be $1,000. So we're going to be using an example for $1,000. So the initial purchase amount is $1,000. Now your daily interest rate will be 3%. Okay, and the length of term is going to be where you have to find out the day goal, your week goal, your 30-day goal, and your 1 year goal. So right now we're going to find the 1 day goal, and then we're going to go to daily investment rate will be 100%. Second year. Some people coming in the chat now. Everyone who just came into the chat, please check the chat. I think I might have to put it again there. Let me put the link one more time. We're on compound daily interest right now. We're going to the compound. Please click the link and follow along. We're simply just putting in the amount section, $1,000, and then we're putting daily interest 3, and then we're finding our 1 day goal with 100% reinvestment rate, and we are not going to do weekends because we don't trade on weekends. Okay. Suman, if you want to click that link, buddy, and then go to the compounddaily.org and kind of follow along. I'm gonna give you guys an extra couple, seconds to prepare that before I move on. Someone else is new here. I don't think you guys get when you guys pop in. I don't think you guys can see the chat, so I'm gonna post it one more time for Suman. Just click that link, Suman, and then just follow along. All right, so since we obviously put $1,000 into the initial purchase amount, we do the daily investment percentage 3%, length of term 1 day, daily investment rate 100%. We do not include weekends if we're going to calculate this. So our day 1 principal, you guys, will be $30. So at 3%, it will be $30. So what we're going to want to do is you're going to want to write it just like this. I have it set up all ready to go. Do you guys see my whiteboard?
Yeah.
Everyone's able to see my whiteboard, correct? Just type a 1 in the chat if you can. Okay, so how you guys are going to want to write this up is that you have an initial amount. Okay, this is how you want to write it. You have an amount of $1,000. Okay, and so when you have an amount of $1,000, what we're going to need to find is your day goal, your 1 week goal, your 30-day goal, and your 1 year goal. Okay, so what we're going to want to do is write day 1 goal. Okay, so you put D1 for day 1, and that's obviously $30, right? Because 3% of 1,000 is $30. Then we're going to find our week 1 goal, which is going to be $229. Now, if I go back over, okay, back over to compound daily interest, how we're going to find our 7-day goal, which is our week goal, is we're going to go back to length of term, and we're going to type in 7 days. Now we're going to calculate that 7 days, and boom, there you go. You got 229. So your weekly goal should be 229. Okay. So now we go back to the whiteboard, and then I show you guys that pretty much I have it written down there, 229, and then we're going to find our 30-day goal. We go back over to the compound daily interest, length of term, we put 30 days, and you should be getting about $1,427. Now that's about a month goal, and this is your long-term goal, okay, you guys? We're going to find our daily goal at the bottom. This is just your long-term goal for people who want to go slow and not too fast, okay? So once we go back over to our compound daily, we find out the 30-day goal, and then it obviously gives us a cumulative amount of 1,427. We write that back into our 30-day goal. Then we got to find 30-day, let's see, our 1-year goal. So we're going to put for our days 208. Okay, so we put into the length of term 208 days because we do not trade on weekends. So once we do that, we calculate it, and our net gross profit should be about $466,000 by simply just going at a $30 a day goal every single day for the next 208 days. That's not even you making over $30. That's just you making $30. So once we go back to the whiteboard, we're going to write down in there our 1-year goal. And now we actually have a direction. Okay, now we actually have a direction here. We have our amount, we have our day 1, our week 1, a 30-day, and our 1-year goal. Now what we got to do down here at the bottom, where I'm going to color up right here, okay? That was a little ugly. So what we're going to want to do is do a numeric value of 1 through 4 vertically, okay? Because we're going to find our daily goal. Now this right here at the bottom is your compound daily goal, 70% pairs at 3%, okay? So what we're looking for are 70% pairs right here at 3%, okay, movement. Because remember, our first trade, if our day 1 goal is $30, will be $30 at 3%, okay? So now that becomes $30. Now, how we're going to calculate each of these steps is that we're going to go back to our broker account. And right now I'm going to, let me see here. Okay, here we go. So I'm on my broker account. You guys can see my broker account. Can anyone put a 1 in the chat so I know we're on the same page? Okay, awesome, you guys. So now we're going to bring out our calculator. So what I'm going to do to just do this on here is I'm going to bring out my calculator, and we're going to pretty much just calculate this, okay? But before I bring it out, remember, we got to look for 70% pairs to the left where it says currencies. So let's look for 70% pairs. Doesn't look like there's 70% pairs tonight. Let's see. Okay, it looks like there's only 64 on my broker account. Let's see, let me try this other one here. Okay, I think it looks like everything's 60 or 70%. Okay. So what we're gonna do is we're going to do that AUD USD. It's at 64% right now. And I'm gonna go over there. Obviously, this isn't 70% pairs, but we're just going to try to just make the math for this, okay? And it doesn't really matter. The reason why we're doing it here, it's better anyways at 64 because now you actually get to have, it's not as risky. So let's just go through this, okay? So if our first daily goal is $30, we're going to write $30 in that amount section, okay? In our broker account. Now we write $30. We're going to bring up our calculator now. And what we're going to do is we're going to add, okay? We're going to add $30 plus 19, because remember, we are simply just adding $19 to $25 every time compounded for each trade, okay? It's about roughly $20 to $25 compounded. So that pretty much will give you $49. So if I went back over to my my whiteboard, if we won that trade, okay, that $30 trade, we would be at $49 for our second trade. Now that $49 goes to your second one. And then now your second trade becomes $49. And so now we go back over to our broker account and we're going to do the same process over again. And now we're going to just bring up the calculator. First, we're going to put $49 in the amount, and then we're going to add $49 plus 31, okay? So 49 plus 31 equals 80. Once we have 80, we go back to the whiteboard or your notes, and we type 80 for our second trade, okay? So our second trade, 49, goes into 80. Now our third trade is $80, okay? And then we just go back to our broker account and we just simply repeat the same steps. And then 80 plus 51 equals 131. So your third trade, or your third winning trade, becomes 131, okay? Now your fourth trade will be 131, and once you go back to your broker account, you're going to see your fourth and final trade. $131 plus 83. So you make about 214, okay? That's your full profitability at the fourth trade, okay? And so like I said, if you went after 70% pairs, it's going to be about 248 to 268, depending on the percentage. That's why I wanted to go after 70% pairs. But we're just going through this because obviously the market isn't giving us a 70% pair. So when we go back to the whiteboard, you guys, we're going to type in 214. And there you go. After you hit that fourth trade, all you're going to simply do from the fourth trade is rinse and repeat and start back at $30, climbing from 30 to 80, 80 to 130, 130 to 214. And that's what you're going to do systematically, repeating, okay? You're going to literally repeat or rinse and repeat this process as soon as you hit that fourth trade, okay? Now, the reason why I only do 4 trades, I get a lot of questions about this, and why I don't do like more than that is because if 4 trades take about 30 minutes each and the market flips on you about every 15, 30, 45 an hour mark, why would I want to stay in the market to do 8 more trades when I'm going to lose those next 4 trades because I don't know what the market's going to do between the last 30 minutes and hour mark when it has 2 different trend directional flips? Am I going to really go after 4 different trades when I just won $214? Hell no. I'm going to wait, get off the computer, wait 2-3 hours, hit the bag again, and then make another 200. Do the same thing again because you have literally a limited time frame from 7 a.m. to 7:30. Then 7:30 to 8, things will switch. So that's why I literally go in and out of the market between literally 30 to 40 minutes, and I never see it again. Okay, I don't want to be in the market too long, you guys. And that's literally how most professional traders trade. You're never going to see anybody sitting on the computer for 5 hours trading. That's not how they trade. I'm telling you right now, you're going to lose majority of the time doing that. So you want to pick your poison and get good trades, setup trades. So after we find out our compounded trade, we're going to go over to high leverage trading. So what is high leverage trading? So we are initially only allowed to lose 6% in one day. If you lose 6% in one day of your account, that's an equivalent of $60, okay? So a 6% movement for you will be $60. Now you might ask yourself, what do you mean by borrowing money? Well, the concept of leverage is that you can actually tenfold $100, and $100 can give you about $1,000 in borrowed leverage. So Instead of using leverage from our actual broker, because we don't actually, we're not allowed to borrow leverage. We're going to borrow it from ourselves. So how do we borrow money from ourselves? Well, you have $1,000. Instead of you paying back the broker, you have to pay yourself back. Yeah, I know it sucks, but every time you lose money, realize you have to pay yourself back. You're not paying anyone else back. Okay, so if I were to do a 3% movement, psychologically, I'm going to know that I only get one more shot at 3% when I'm trying to get into my flow, when I'm trying to get into my system as I'm trading. If I'm only allowed to lose twice with a 3% movement, I'm done. So if you're borrowing another $30 from yourself in order for you to cheat the system to get ahead about $100, then you have to realize the risk, reward, and ratio that you're doing it at. So if I were to just say, okay, I want to risk 6% today on my account, I feel it, I'm confident, I know I can do it. I'm going to go from a 3% trade to a 6% trade at $60. Now I'm going to go back to my account and we're going to calculate a high, excuse me, two people are coming in. We're going to calculate a high borrow leverage trade. So let's go back to our broker account over here. We're going to put in $60, okay? Now we're going to add $60 to our calculator. 60 plus 38 equals $98, okay? I go back over here, my 60 turns into $98, okay? Oh, not mean to do that. Okay, so now I'm going to go back to my broker account. $98 plus 62 is 160. We go back over here, $98 turns into 160. So right off the bat, now you're already realizing on your second trade, instead of going out there and watching Go Live educators who trade 5-10 trades, okay, you're risking so much. You guys don't even realize it's dumb. I just taught you guys how to make $160 within 6 minutes just by borrowing 30 additional dollars from yourself. Why would you want to stay on longer than an hour a day? That makes no sense to me. No sense. So I borrowed $30, I make 60, 60 goes into 98, 98 goes into 160. You're pretty much already halfway ahead of the compound plan with 2 trades. Okay, 2 trades. I shouldn't hear any complaining about people not making money now because I just showed you how to cheat the system. Okay, so now we're going to go back to our broker account. $160 plus 102, 262. I don't need to do that math. So our third trade becomes $262, you guys. $262. Guess what that means? You pay off your subscription just in one day. One day out of 3 trades compared to 4 trades. Do you see why leverage? Do you see why borrowing money? Do you see why creating a system is so much more beneficial than just going out there blind? I like to look at trading like you're going out to the battlefield and you're going to either die or you're going to get wrecked or you're going to come out alive with a reward. And that's either you're going to get a crown or you're going to be crowned king, or queen. So whether you do it right, you'll get rewarded. And whether you do it wrong, you're going to die. you're going to get wrecked out there in the battlefield. Okay, you're not going to die, but you're going to get wrecked out there in the battlefield. So obviously now that we do that, 260, 262, we add 262 to 168 for our final compounded trade. So you make $430 on your fourth trade compared to $200. So that's just at 64% pairs. 64% pairs. Imagine if we went after a 70% pair, you guys. That's over $500 almost. Okay, so how do you utilize this compound plan that I created, and how do you utilize borrowing money from yourself? Well, it's very simple. Okay, you have the choice as a trader to risk all of your money, to borrow your money, or to just stay along the lines of following the rules. Now, the rules are obviously boring, and they're not going to get you as great success as you would using high leverage, but you will have greater success if you just follow the rules. Okay. Now, how you're going to utilize a high leverage trade is, let's just say you go in and you know for a fact, you're like, damn, I know this is going to go down. This is straight going to go down. You go in 60, you go in 60 bucks, you win this $60 and it turns into 98. Okay. You see one more play, it pops up one more time, it gives you a second chance. You go in $98. Boom. You make that 160. You're already up in 2 trades within 6 minutes. You're on a little bit of a high right now. Okay. So, you won 2 trades, 160. You have the obligation to have a decision. Now, your decision from 160 is to start from here and go all the way back to your first compound and start right here. Okay, at 131. Now, you might say, well, it's at 160. Why would I go down to 131? Because you can save $30. Okay, you can save your $30 instead of actually you borrowing the initial $30 from the very beginning. You get to keep that back. If you do not become greedy and you look at 160 and say, I'm going to follow the rules, I'm going to go within the guidelines, and I'm not going to go after 160 to 262. I'm going to keep my profit, and I'm going to go down to my first compound at 3%, and I'm going to keep the $30 that I risked, that I borrowed, and boom, you just paid yourself back the $30 that you initially borrowed in order for you to get ahead. And now when you go down to your third compound, you save that $30 from 160. Now you're at 131. You hit that bag, you make 214, no risk. No risk. Okay. There is risk, but you didn't risk the additional 30 plus whatever you lost if you stayed on the actual leveraged, high leverage trade. Okay. So you have choices to go from high leverage back down to reality, and then from reality up to dream world, because you can make a lot of money off just 4 trades. Okay, so that's how you guys are going to utilize this plan, and that's why I want you to utilize it, because if anyone in here just goes high leverage trading, I dare you to do it. You're not going to be happy, and the reason why you're not going to be happy is because if you lose any single one of these trades right here, okay, you lose any one of those trades, you're negative. You're negative, and you're going to say, oh, but I thought this was compounding. Yeah, it's compounding, but you borrowed an additional $30. So if you lose that $60 right off the rip, you're negative 6% for the day. That sucks. That sucks. That means you can't touch your account all day. I don't care what educator goes on. I don't care who's the best in the game. You can't go on. Because if you lose another one, you're down another 2%. You're down another 3%. And then at the end of the day, you're like, crap, I lost negative 15%. Don't play that game. Like, don't. It's not even worth it. Okay. Trust me, 5 years of experience. I've broken, oh my gosh, I've broken my crypto account. I've borrowed money to just freaking make my life better about trading. It didn't work. Nothing worked until I used my own money and I actually made a plan. Nothing worked without a plan. Okay, so don't go in this thinking that you're some sort of person who's a crypto god or a trading goddess or a trading god. There's no such thing as that. You're going to get wrecked. And even the best and the best get wrecked, you guys. So follow the plan, realize your limitations, know what you're good at, and just go after it. Okay. So now after that, you guys, I'm going to exit this. Sure, you guys see my screen. All right. Okay, so everyone, please type a 1 in the chat. They understand the compound plan and how to borrow money and how you can pretty much just bypass. Obviously, the faster you get in and out of the market, yeah, it's fire. So the faster you get in and out of the market, the better it is for you to secure the money, you guys. Okay, so once we figured out the compound daily interest, let's go over to Forex Factory. Now I'm going to send this in the chat. Everyone brand new needs to have this bookmarked in their web browser. This is going to be the main tool you use right before you trade, right before you do anything. You need to look at the news because the news affects you. The news is going to affect you, you know, in a major way because we're trading currencies around the world. And unfortunately, the US, you know, the US, we have inflation, you know, we have manipulation. We're not really the richest country in the world. So we have some problems, you know, with the US dollar. Same thing with, you know, Korea or Japan. Same thing goes for that. So there's going to be news revolved around our currencies like every hour there's going to be news because there's politicians, government officials talking about the news and how to make our economy better. So just realize this is the first step you go to. If you go over here to this little more button, you can actually see the whole week ahead of you. And right now we see Sunday. So obviously Sunday is not a great day to trade, you guys. We have OPC meetings all day. So that's going to affect all currencies. And the only currency that it says that we can trade is GBP. So today is not a great trading day. Market's going to be super slow. Tomorrow is a better day in around 10 a.m., 7 a.m. After that 6 a.m. GBP. Now, how you look at this, you guys, is that any red folders stay away from. Any orange folders, please stay away from. Any silver folders that you see, for example, on Wednesday, JPY has a bank holiday. That simply means that that currency's bank is closed. Okay, bank holiday. They're just all their JPY banks are closed. So that currency will not be fluctuating as powerful as the other ones, okay? So you only want to trade yellow folders. Now, I have some questions when they say tentative. Tentative is like a big meeting, something's going to happen, as well as all day. Like all day means currencies are affected in some way from this meetings. Okay, and another thing is if you guys are analytical, you can go over here to the details to actually find out why it's red. So obviously it says FF notes, next release date, frequency, source, and you can just go into this and look at it fundamentally. Over to the right, we have graphs. And the graphs you can tell from over a span of 10 years to see how well the ranges have been for each currency. And that's all you guys are really going to want to use, and how you look at this is simply going here and saying, okay, Sunday GBP is good. Okay, so then you're going to want to kind of just trade GBP. Okay, so after that, we go over to currency strength meter. Let me put this in the chat. All right, so everyone brand new, please look at the chat and then save and bookmark the live charts code, please. This is another tool that we use. Sometimes cash trap, the markets flip a lot and the currency strength on cash trap may not be correct. So what we use is this live charts code to double confirm everything because the live charts code is the only platform that does continuous data updates. So they do literally updates every second. So if I were to sit here for 2 minutes or a minute and just refresh the page, you're going to notice, oh, it just did. So NZD just went to red to orange. So it moves, that it literally gives you data every few seconds. So this is why I use this. And how you want to look at this is, okay, we went over to Forex Factory. We see that GBP is okay. I go over here. Where's GBP? Well, actually on here, it says that GBP is a loser. So I'm not going to be trading GBP. I noticed CHF is is in an uptrend. Anything 4 or 5 bars, 4 bars means it's in an uptrend. 5 bars, it's pumping massively. It's in an uptrend. It's a pumper. Okay, it's gonna be massive movement. Anything 3 bars, it's moving pretty slow. Okay, very slow. Anything below 2 bars, it's gonna be in a downtrend. Now, usually how the thumb rule goes is that you want to trade CHF versus CAD, CHF versus GBP, CHF versus AUD, and USD versus CAD, USD versus GBP, USD versus AUD, and then obviously the pumper against the losers, JPY AUD, JPY GBP, JPY CAD. And now another indication of a downtrend is if you see anything 4 and 2, okay, 4 and 2, so 4 bars versus 2, that does not mean it's in an uptrend. What that means is that CHF was in an uptrend and now NZD is pushing it down, so it's downtrending just slightly. Okay, so anything 4 to 2, you guys, it's in a downtrend slightly after being in an uptrend. So NZD is going to be pushing it down. That goes for Euro NZD. NZD will be pushing Euro down. That goes for USD NZD. It will be pushing USD down. And JPY NZD, JPY will be pumping up, so NZD won't really be massively pushing it down. Okay, so only 4 to 2, 4 to 1 for uptrends and downtrends. Now, after we have that, you guys, I need to go over to the trading view account right here. So how we pretty much use these brokers accounts is that what we're doing as traders is that we're predicting the market's movement, okay, whether it's going in an up direction, whether it's going in a down direction, and we're predicting that direction between a 1 to 3 minute desired time frame. Okay, so if I were just to do, for example, let's just say $1, I did $1 here and I think that it's going to come down, I would just do $1 and then obviously it does a minute. If I am not in profit, I have the opportunity to buy and purchase an additional 1 extra minute for 30%. Now that 30%, there we go. I was able to do it. That 30% obviously adds for my dollar position to $1.30. Okay. So if you were to buy an additional minute again for the second time, it's not going to give you an additional minute. It's going to give you an additional 2 minutes. Okay. So that's what you have to be wary of. That's why I do not roll over more than twice, because one rollover for a 3 minute trade turns into 6 minutes, and then another additional rollover turns into 12 minutes, not an additional 12 minutes after the second rollover. And so once we have it go up, you also have a double up option where if I were to double up, it doubles up my position to get that first position back if you did not get a good entry. And if it keeps on going higher, obviously I will lose that trade, and you're only in and out of the market between 1 to 2 minutes of that current desired time frame. And pretty much you have here your order size at the bottom, your payout, and then you also have your call options, your put options, your time start and expiry, and you also have your close status. So you can always check your orders, and I suggest people getting a trading book so they know where they went wrong in the trade. And simply, if you win this trade, it's going to turn green. If you lose this trade, it's going to turn red. And there you go. That's what it looks like when you take an L straight to the face. It's going to be a red box. And then if you take a win, it's going to be a green box. Okay, you guys? So now let's go over to Cash Trap. Everyone, please open up their Cash Trap. All right, we're getting through this, you guys. We're almost done. Thank you so much. I really wanted to express the high leverage compound trading because not a lot of people were on the first session. So I will be posting this on YouTube if you guys need to refer back to it. How many people are in this? 12 people? Oh, a lot more people should have showed up tonight. A lot more people should have showed up. All right, you guys. So you're the lucky ones here. So that's a good strategy I showed you. All right, so this is how you guys are going to be able to use this cheat sheet. Anyone in the chat does not have this cheat sheet? Can anyone please type a 2 if they do not have this cheat sheet? I need to write your names down if you don't have this cheat sheet. All right, everyone has this cheat sheet. 12 people, including the new people, have the cheat sheet. Sergio, you got the cheat sheet. Chanel, you got the cheat sheet. Suman, you got the cheat sheet. All right, you guys, I'm gonna assume that some people don't have it in here. It's okay. I'm gonna put it inside this chat right now. And there it goes. It is in the chat right now. It's gonna be loading. It's called the Cash Trap Mastery Guide. All right. So once you guys actually click it, you know, you can obviously download it and then follow along. This is the cheat sheet that I used when I first started learning this system, and this is all I used in combination with watching Dr. Josh Lee on Go Live. Okay, so it's going to be loading there. I'll check back on it. Okay. All right, cool. Everything's good. All right, you guys. So This is the cash trap rules, okay? Learn to trade the cash trap rules. It's so simple. It's literally given for you, okay? The cash trap rules, which arrows to take. If price is trending, rule 1, consider up arrows in an uptrend at support levels, okay? So what does trending mean, you guys? Trending simply means, let me stick up this right here. Trending is this, I need to get a better pen. Let me get this highlighter. Let's see. Okay, this is trending, okay? This whole area right here, this area was trending in a downtrend, okay? So when cash trap is telling you if price is trending, your immediate thought should be, I should be looking for an uptrend or a downtrend. Now, in a downtrend, rule 2, consider down arrows in a downtrend at resistant levels. So what are resistant levels, okay? So I already found the direction. Now I just got to look for the resistant levels. One here, one here, one here, and one here. We have 1, 2, 3, 4, and then over here, 5. We have 5 resistant levels, okay? The resistance are the red boxes, you guys, that if you were looking for a downtrend, remember trending, rule 2, consider down arrows in a downtrend. You never want to buy these support levels. You only want to wait for price to keep on going downwards. It pops up, comes downwards, pops up, comes down. That was really bad. It's all right. It comes up, comes down, hits resistance, comes down to support, comes back up to resistance, comes down to support, comes back up to resistance, and then it comes down to support. So now that you see that I drew this line, look at where my actual black dashed lines are, right? So every time the price came up to resistance, you want to sell. Price came down to support, you do not sell. You wait for that price to come to you, came up to resistance, you sell again. You wait for price to hit support, comes up to resistance, you sell again. And that's how you pretty much look for a trending position, okay? So if price is consolidating, rule 1, consider up or down arrows at support and resistant levels, okay? So if price is consolidating, this is going to be the consolidating that we're talking about over here, okay? Whenever you see the market consolidate, which means that it's staggered in this little like channel, like a river. If you look at a river, you guys, it's just a very straight stream. If you ever see price kind of stay in a stream-like area, it's gonna bounce from these lows to highs over here, okay? And it's going to literally just keep on bouncing from resistance to support, back down to support, back up to resistance, back down to support, back up to resistance, back down to support. And it's just going to keep doing that. So that's why if price is consolidating, rule 1, consider up or down arrows at support and resistance levels. So in this consolidation, you can actually make positions for a sell and a buying opportunity. All you really got to do is wait for that green support, wait for this red resistance, wait for that green support, wait for that red resistance, and pretty much price will be bouncing up in there just like this. You see? Okay, I don't know why my mouse keeps grabbing onto that thing right there. Okay, so there we go. So obviously price came down to support, it goes up to resistance, you want to buy that. Okay, it goes up to resistance, you want to sell that. So that's how you take those both ways. Okay, so if price is trending versus price consolidating, how do I just kind of explained the pivot points, but how do you actually get into the market in an uptrend? How do you get into a consolidation? And how do you get into the market in a downtrend? Well, this is the perfect example here. The basic support and resistance level in an uptrend. As price starts at that support level, you want to wait until price does a pull up. Okay, well, technically it's a pull back, but it's called a pull up on this case. And it pulls right back up to resistance. You wait for the pull back. Remember I said pull, it's going to pull up and then it's going to pull back to you. So initially in an uptrend, you want to wait as if you're waiting under a tree for the apple to fall in your basket every single time. You do not want to climb up that tree and grab the apple, okay? You want to wait for that apple to come to you. So as price goes all the way up to resistance, it pulls back, the apple falls off the tree, and it bounces right into your bag. You literally buy the market at support, and then you do the same thing, wait for price to go right back up to resistance, wait for that apple to drop, come to you, and boom, you buy support again, okay? Now, how this is going to look on this chart is going to be pretty simple over here. So in an uptrend, you want to buy, remember, right? You want to buy as price comes up. Oh, well, there's the apple. It falls down from the tree, comes back up, falls down from the tree again, comes back up, falls down from the tree again, comes back up, falls down from the tree again, comes back up. Okay? So initially, you continue to have these opportunities if you just wait here. Okay, so in a sense, you guys, whoever's the most patient, who patientest trader is going to be the most rewarded one. Okay, so we have several opportunities here, not just in a buy, but also sell. But remember, we don't want to pay attention to the selling opportunities. We only want to pay attention to the buy because it's a better, more confident trade. So as price goes up, it hits resistance, comes down, the apple falls, we pick up the apple, boom, we go. Apple falls again, we buy it, we go again. Apple falls again, we buy it, we go. Boom. That's how easy it is, okay? And now same thing, vice versa. It's the same concept for a downtrend. And it's going to look like the same exact thing, the same exact process. You know, same thing here. You're in a downtrend right here. And then you obviously have these pivot points, which I spoke about earlier. And then you want to wait. Remember, instead of letting the apple come to you, you can refer this to a basketball. I'm trying to just make this the most simplest way for you guys, okay? So obviously, the basketball bounces all the way up to resistance, comes all the way down. Bounces off resistance, comes all the way down to support. Bounces off resistance, comes all the way down to support, okay? And then here we have a huge bounce, and then the ball comes back down. So in a downtrend, when support and resistance levels, you want to be looking for selling opportunities at resistant levels, okay? That means that those red lines, you guys, okay? Now, market phase, okay? Identifying trend direction using the cash trap indicators. In an uptrend, price stays above middle line is considered up arrows, okay? So these middle lines, what are you talking about middle lines, Aaron? Well, on this cash trap PDF, we used to have 3 medium lines. Now there's just 1 medium line you guys need to pay attention to, okay? Right in this area, okay? Right in this area, in a downtrend, okay? Obviously we see here price in the downtrend, price stays below middle lines considered down arrows. Price stayed below those middle lines the whole entire time. And that's where you can make a confident 100% sure trade of when to sell, okay? You see that? It's respecting that middle line so you know you can sell. Now, if I were to look back over here, it does it again right over here. Look how far this respects that line. It only broke it once and then came right back down. Now let's look at an uptrend. Wow. Respected that line. Respected this line. And respected this line. So throughout these areas, you know you can buy in this one over here. You know you can buy in this one over here. You know you can buy in this one. And then when price reverses, you know you can sell in this one. And you know As price continues down, you want to stop over here because now price is becoming consolidated between this area. So now you can make buying and selling opportunities between this area. Okay. So if I pull this back, uptrend, looking for up arrows only, downtrend, only looking for down arrows at resistance, consolidation, up and down arrows, downtrend, only down arrows. So it literally, the reason why I know this so well is because through repetition and repetition, you guys, the patterns never change. And that's a little secret that I only tell a few people, but really it's not really a secret. It's just the patterns only go up, down, side to side. That's it. They don't go zigzaggy. They don't do anything crazy. Only on your broker accounts, but as in candles and charts, they only do three things: uptrend, downtrend, and consolidation. So if you guys learn those patterns, it becomes second nature. Okay. So now we go over to currency pair. We notice that what currency pair am I on? I am on USD JPY. Okay. So we're on this currency pair symbol. Okay. So obviously right now it's giving us alert panel to the right. Cash Trap literally gives us alerts every 5 minutes. They're brand new trade ideas every 5 minutes. Okay. And so pretty much what we're going to want to do here is that when we're looking for a currency pair, we're going to have to add several things. Okay, so one to the right, we see the symbol USD JPY. Okay, we have the second alert panel. Now that alert panel, if I were to click it, gives you the second call out from 10 minutes ago. So if I were initially going to look at this, I'll say, okay, the first call out was a buy. Now the new one most likely is going to be a sell. There you go. You have a sell. So initially I could be setting up mentally for a selling opportunity just because I looked back in the past history from 10 minutes ago. Okay, so that's why we have two of the same alert panels. Now we have a call or put option at the alert panel, and you see over here we have a put option for USD CAD on the PDF, and it's telling us to do a sell. We have a call option on Euro USD at the bottom for the example, and it wants us to do a call option. Put option means sell, call option means buy. Whenever you hear me say in this following week, put option 664, put option 664, that simply just means sell option, okay? Now, when I say call option, all that's going to say is going to be buy. Just think of it like that. Calls buy, put is sell, okay? Now, the alert panel is going to give you a currency strength meter to the right. And obviously, this alert panel will tell you the trend. So it's not going to just tell you or show you the trend, but it's going to show you like mentally, okay, is it trending? Is it downtrending? And this is how you want to look at this. USD CAD, for example, okay, USD is 14, CAD is 38. USD is weak and CAD is stronger. So since the top currency is weaker and the bottom is stronger, anytime you see the bottom currency weaker or the bottom currency stronger, we're going to be in a downtrend. Anytime you see the top currency stronger, we're going to be in an uptrend, okay? So if you look at this, we notice that USD CAD is in a downtrend and Euro USD is in an uptrend. Now, the alert panel gives us trade entries. We only have to look at the last 3 digits, okay? So, for example, the last 3 digits for USD CAD, it's giving us an entry. Now, Cash App is saying to enter at 317. Anyone brand new in this, or anyone brand new in the Zoom call, this is how the training is going to go within the next week, okay? If it says put option for USD CAD 317, I'm going to call out, okay, everyone, 317 or above, 317 or above. So what that means you should be doing is that when I say 317 or above, that does not mean to get in at 317. That means to get in at 320, 325, 330, okay? What Cash App is giving me is an overall estimation of where the price is going to land. And I just want to get in on that best price possible, even though it's giving me a price. So if it's in a downtrend, you want to be looking for 317 or above, okay? Now, if it's in an uptrend and we're looking for buying opportunities and the entry is saying 553, this is how I'm going to call it out. Euro USD, call option, it's going to be 553 or below, 553 or below for a buy. The reason why you want 553 or below is because price will pull back and give you a better number than actually Cash App. And sometimes Cash App is dead on the money, okay? Sometimes Sometimes cash drop is dead on the money or really close to it. So your best opportunity is to wait for price to hit 553 or 5540 or 5530, and then you get that price, okay? Now, we used to have to do point systems, you guys, for Cash Trap. We used to actually have to add up all of these points mentally, but now since Cash Trap 3.0 has come out, you do not need to add them mentally. You just need to actually equivalate and make a prompt decision on what's beneficial for you, whether it's a good trade, better trade, or best trade. So that's how you should look at this. I only want good, better, or the best trade setups, okay? So Cash Drop gives you a point system that allows you a value to each trade. The more points, the better the trade. Call option point system. If there's a green arrow, we add 1 point. So let me go back to Euro USD or USD JPY. Let's see here. This one's in an uptrend. Here we go. Okay, perfect example. So this has a call score of 2. Obviously, in an uptrend, would this be worth buying for us? No, because you want good, better, or best trades. But because you're making a conscious decision, or an educated decision, you could have possibly took this because it was a 2 call, or is a score setup of 2, and it could possibly build up to a 3 or 4 point trade. So how you would want to look at this, and the reason why I'm going to tell you why it's a 2-point trade is this reason here. If there's a call option, okay, you add 1 point if there's a green arrow. So we're at 1 point. Is the currency strength meter the top stronger than the bottom? Yes, it is. Euro CAD is 54/12. So we're at 2 points. Is there price at green Bollinger Bands? No, it's not. It is not at that green Bollinger Band line. So it's just a 2-point trade. Is price at the green support line? No, it is not. It is nowhere near the green support line, at least on my screen. So it's still a 2-point trade. Is there a buy button on the scroll stick RSI? No, there is not. You drag your mouse on the current candle, scroll it all the way down, and there's an SMB button. No, there's no SMB button. Still a 2-point trade. Is there a cross up through the green line on scroll stick RSI? No, there is not. The top one is actually at the oversold. Is there a cross up through the bottom green line on the RSI? No, there is not. So this is why this was a 2-point setup. So that's so amazing that even though I added up all the points never changed. That tells me Cash App is 98% right every time. So I don't need to be adding up the points anymore. I just need to trust the system and know and whether or not this trade's going to be worth it for me. Okay. So that's how we used to add up the point system for this trade. Now, obviously, if you took this trade, you're going to have to know that you're going against the indicators because it's a 2-point trade. But obviously, if you took it, let's look at where EuroCAD wanted us to get in. Entry price was 106. We drag our mouse down. Wow, 106 exactly at that close of the candle. So how you would want to take this is that you would want to go from EuroCAD entry price, you guys, call option 106 or below, 106 or below, 106 or below. And then literally price didn't come down to 106. So you would want to grab that 106. Okay, that's a perfect example. But right off the bat, you notice it gave you that 106 10 minutes ago, 8 minutes ago. Okay. So now when we look for put options, okay. Let's see here. Let me look for a put option. Okay, here we go. So your USD CAD. All right, so put option point system. Add 1 point for the red arrow, right? 1 point. Currency strength meter is the bottom stronger than the top? No, it is not. So we don't add 1 point. Okay. Is price at red Bollinger Band lines? Yes, it is. So we add 2 points. Is price at red resistant line? Yes, it is. That's 3 points. Is there an S on the scroll stick indicator? No, there is not. Is there a cross down on the red line on the scroll stick RSI? Yes, there is. So that's 4 points. Is there another cross down on the bottom RSI? There's about to be. So if that becomes a cross down, that's going to be a 5-point trade. Right now, mentally, this was a 4-point trade, and Cash App is giving us a 5-point trade setup. Okay, so this could go into that. But like I said, why would you not want to just take a put score of 5 for every single one? Because you have other eliminating beliefs like your indicators that you need to add together in order to take a good or best or a good, better, or best trade. Okay. So obviously you may say, well, Cash App was wrong on this. No, it wasn't. It was just telling you there was a setup and you need to add in these indicators as well. Okay, so watch this. Ready? So what are we on right now? USD CAD. Okay, so USD CAD. Why did this trade not go in our direction, even though Cash Trap said so? Okay, one, the 200 EMA is already above price. So we're in a massive uptrend. You already right off the bat, that's your first mistake. You tried selling in an uptrend. That's your first mistake. Okay. Second mistake. Is the currency strength meter stronger on the top than the bottom? Yes, the top is crazy strong. Okay. It's USD CAD 66 over 14. So that's your second mistake you just realized. Your second mistake was you went against the currency strength. Okay. Now, your third mistake, is there an immediate cross down? No, there is not. There was, but it never crossed through that red line. There's your third mistake. Guess what your fourth mistake is? Was there a second cross down? No, there wasn't. That's your fourth mistake. Now, was there an S on the skull stick indicator? No, there wasn't. You made 5 crucial mistakes on this play. 5 crucial mistakes because you were just being lazy and not adding the full point system and going along with the trend. That's why I say you do not take trades that just say 5 points. You need to realize that you're going to make a lot of mistakes. And what I'm trying to help everyone in this whole entire career to do is try to eliminate as many mistakes as you can, because mistakes are costly in this game. Okay, so like I said, you never want to sell, even though it says a score of 5. It looks juicy, it looks great. You never want to sell on this, because I just showed you right off the bat in less than 2 minutes your mistakes. Okay, so that's how you guys are going to add the point system. Now, when we simply do this, Cash App rules, which arrows to take. If price is trending, rule 1, consider up arrows in the uptrend and at support levels. Rule 2, consider down arrows in a downtrend at resistant levels. If price is consolidating, rule 1, consider up or down arrows at support and resistant levels. Okay. Now, does anyone have any questions about any of the Cash App, the compounding, anything at all? All right, you guys. And also, please, if everyone, please, also downloaded the Cash Trap Mastery Guide. I did kind of push it late, you guys. I don't really trade after 7:30 because Matthew Thayer gets on Sundays, and my broker accounts get all crazy, so I don't like trading around that 7:30 to 8 mark. So I will make it up to you guys. We will be hitting the bag tomorrow. We have our free trial at 7 a.m. and then we have sessions all week, you guys. Okay, all week. Okay, so tonight's training was mainly about the high leverage compounding, as well as looking at Cash Trap, your indicators, as well as adding the points, and really using the tools I give you for your benefit. Okay, I taught you guys the compound for 3% as well as a compound for 6%. And now that you guys actually have the ability to know how to do this,